Hello everyone, welcome to the therrratio, where we focus on chart-driven technical analysis. Today's video is about misconceptions about bullish and bearish divergence, clearing up the Bitcoin confusion. Before I start with talking about bearish and bullish divergences, there was news which I came across about BitMEX exchange. What they announced today was that they are closing down from 23rd September. That's just 2 months. And it seems like the cycle is in some way repeating, because over here during this bear market we had FTX closing down, we had Celsius closing down, we had Luna, which also contributed to this bear market. So it seems that BitMEX is one of the first ones who are somehow bringing the bad news, one of the big bad news of the bear market. Now, looking at the price action, if I would think what is going to happen, given that we have news today, the market is still to react in a proper way, because we did see a small drop. Also, BitMEX is was not as big as FTX, so probably the downwards move won't be as severe, but still it's a start. And perhaps at some point Michael Saylor or someone else decides to sell a couple of thousands of their Bitcoin because they are leveraged and they want to get out of the position. Who knows? And all of this bad news, you can see it in the price action. Sometimes before, sometimes when the bad news occurs, the price still rallies, and then the price tells you, all right, I have taken out all the stop losses, I have taken out positions of leveraged traders, and now it will continue to do its thing. Now, why do I want to talk about divergence? The misconceptions is a lot of time I come across social media posts where people say, oh, there is a divergence, now it's going to be bullish, but then the person does not acknowledge when the divergence is over, or does not identify the recency of the divergence. I would like to bring back our image of divergence, where we have bullish and bearish divergences. And for people who don't know, the way you identify is when the price, which is the top row, and the indicator, the second row, when they do not go in the same direction, that's when you call it as a divergence. The first three columns, they are fairly easy to recognize, because you see the price is going down and the indicator going up, and that would be a bullish divergence. But there are hidden divergences where price is going up and the indicator is going down. The reason why they are hidden, because they give us an impression that price is trending upwards, which in a way it's true, but the strength in the market is not there anymore to make the trend last longer than some short liquidity sweep. And here indicator it's a generic term, and you can use various indicators. A lot of people use RSI, which is Relative Strength Index. Some people use MACD, some people use something else. What I have chosen for today is the range oscillator. You can go to your indicators, and if you type range oscillator, it pops up, the range oscillator by Xiamen. And what we see here is there is this divergence which happened. I want to select the arrow, which would be, let's see, this one. Let's put it. All right. So the first one was the bullish. Let's talk about the bullish divergence. Bullish divergence tells us that when the price is going low, so for example over here, and the indicator is going up, you get a bullish divergence. And this is what happened. Price after this point rallied upwards. So this divergence has been mitigated. So the price has reacted to this divergence which happened. This divergence was also in a way somewhere on a short frame as well, from this day to this day, from 25th June to 1st July, and here also we see a very short divergence. You can also see it happened over here from 10th of June to 26th June or 1st of July, and you see still a rally. So this was bullish divergence. We see the price reacting to bullish divergence. Now let's look at the bearish part of it. So if we consider right now the price from this point to here, the price is making a lower high, and if I select the arrow on our oscillator from here to here, the price is making a higher high. This falls under the category of hidden bearish divergence. Price has just began to react to this bearish divergence. I'm talking about this one. It has made a lower high, which is over here. The price has made a lower high from June 15th till July 21st, and the range oscillator has shown strength going upwards. But when the price goes down and the oscillator goes up, that is our indicator is going up, we are looking at the hidden divergence. We can extend it a bit. We can also say look a little bit behind from May 30th. Over here. Well, I think this one was from 30th May until today, or 2 days ago, and oscillator was from here to here. This is even a stronger bearish divergence because the divergence has been forming since weeks. It's more than a month. You can go even further from this point. That goes even further. And you continue to see that whenever such kind of hidden divergences form, people tend to forget that we are still in bear market, and when a bearish divergence happens, it is basically a boost to the bearish price action. We are still far away from our accumulation line. Well, not that far away compared to previous video. I think that was already a few weeks ago, and we have passed quite a good number of weeks since the price has crossed the distribution line. But for people who are not aware of this model, the idea here is that when the price is in bear market, it tends to stay in the bear market, so downtrend, at least until it crosses the accumulation line. And once it has crossed the accumulation line, that's when the accumulation period starts. Does not mean Bitcoin has already bottomed. The Bitcoin bottom usually happens after the price has crossed the accumulation line. We have seen it in every single cycle, and that's why the 4-year cycle, the model of the 4-year cycle has been successful all these years as compared to any other indicator. The Pi cycle indicator basically failed to identify the top already in 2021. It was marginally above, so this top in October 2021 was just a couple of $1,000 above the one which happened in April, but still Pi cycle indicator failed at the top. The bottom one also, it has failed. The 200-week moving averages also, the model does not satisfy the condition that 200-week moving average acts as the support for the bottom, because here it already went under 200-week, not by a wick. It stayed, the whole candle stayed under 200-week for weeks. The only model which has been working right now is the accumulation and distribution model, which tells us that price tends to stay in the downtrend up until it crosses the accumulation line, or at least until accumulation line, and then it would be a time to consider accumulating Bitcoin. Now, everyone can decide when they want to accumulate, but the idea of already accumulating before the price has crossed the accumulation line sounds that the risk to reward ratio might not be the best one. I think that the hype which we saw in the last few weeks, when people called out that this was the bottom, that 57,000 is the bottom, perhaps might not hold true, given that we have seen the first bit of announcement where one of the major exchange says we are closing down, and the users have 2 months to basically get out of the exchange, move their funds to somewhere else, on their hardware wallet, on their software wallets, or some other exchange. This already shows that the market is weakening. If the market wasn't weakening, why would they close down their business? Makes no sense. And at such a short notice, 2 months, I mean, people go on summer holidays during this time, and they might not even check their accounts during a bear market, because they would trust the exchange to have their money, have their funds safe. But well, apparently this is the first major bad news, I would say, and it has somehow been reflected right now in and the divergences. And the divergence has been playing out since last few weeks, gradually playing out, but the clear indication was on Tuesday this week. Before that, it was not very clear whether the divergence would play out. If you would look at from June 15th, and the first clear indication of divergence was on July. So from June 15th to July, where the price over this one, this was our first divergence, and price did react to it. We saw 2 days of downtrend, but it's not a trend because it did not break any structure. If it would have gone below this level, then we could have said it has reacted sufficiently. But it went sideways, broke the structure on the higher side, and now we are at this point. Now this can also break, but at this point, given that BitMEX is saying goodbye from the crypto world, and we see quite a strong divergence, which comes out to be coming out from 26th of May. It appears to me that this rally was it. We might see a short pullback, but then the price has to come down, break these levels. Things can of course change, but that's why you cannot predict it deterministically, but rather you have to look at the price, look at the oscillators, and then decide whether is this a good time to enter a position. When I wish to go long, that means if I want to accumulate Bitcoin, the idea is that I want the price to go higher. But if I try to accumulate at this point and the price goes lower, then my analysis tells me that it's not a good time to take the position, because the risk to reward ratio might be bad. I think that would be all for today's video. If you like the content, then do hit the subscribe button. I will see you in the next one. Bye-bye.